Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, once again, the Australian dollar has rebounded off the level of 71.15.25 area. After yesterday, the market did retrace back up towards 72 but lost ground. However, the descent that we've seen over the last 12 hours has rebounded after the market's CPI number for Australia came out higher than expected. However, from the market reaction and therefore from the rebound as well from 71.15.25, I feel the market is slowly forging a short-term base and therefore could possibly see a retracement back towards 72 to about 72.5 cents and reassess from there. The euro reaches its objective of 106.10.25. However, it has displayed a dead cat bounce, meaning the fact is that the market is struggling to find renewed momentum. All eyes do turn to Christina Lagarde's speech on Thursday, and we could actually see a little bit more whipsaw price action. However, with the dollar index, which measures the greenback strength against a basket of 6 major currencies, has posted a fresh 25-month high around 102.38 this morning, the market is still holding to a negative sentiment for the euro. If we do see a break of 106.10, this would give further significance to the downside and could see the region of 104.80 figure being challenged. Like all breaks, when it comes to technical analysis, the fact is that trading the breaks on the support or resistance, we sometimes find the market tends to go back and retest those break levels just to see how strong the market is in terms of the break, as the fact is that we've seen little to the downside so far from the dollar yen break of 127.65 area. With the retracement now back in play, the market may actually find some bearish sentiment returning or even an ambush. Due to the fact is I feel the market has broken down technically, and therefore for those that may have missed the opportunity to try and get in from the break could actually get back in the levels seen where we are at the moment around the 128 handle. In view of the actual price action, we should see another down test and look towards the bottom side of the range around 126, with the broader picture expecting to slowly unfold towards 123. The pound has still maintained a very heavy bias to the downside due to the fact that most market participants are shrugging off that the next rate hike may actually be on hold from the Bank of England. However, we could find that could catch many traders off guard, as due to the inflationary figures that have been recently seen, could actually see the market eventually stage a rebound. But however, the market is holding to a negative bias, and I feel that we could even get towards this bottom side around 123.80 to 124.20 area, and then see the rebound back to around 126. Sterling Kiwi, well, the fact is the market rejected that top side of 194, pulled back, and now broken through that is at 192, and now looks towards 191.10.20 area. We could actually see a break here, and if so, that would give further scope to the downside to 189. As you can see, we've got a bit of a negative pattern still holding for gold. I'm still believing the view from the technicals that we could get that challenge of 1,878 to 82 and reassess from there. Just be on your guard though from that region. We have seen some significant rebounds and may actually see one again. But in the short term, the technicals are quite heavy or negative, and therefore should see that move to the bottom side of that range. Well, a little bit of a jump in oil back above that 101 area, and at present though the market may actually find a little bit of a challenge to the top side, but may struggle as we get closer towards that 103, and therefore could see a rejection from there and look back towards that 97.40.60 area and reassess. Well, that wraps it for the day. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.